Welcome back. I'm Pratap here. Today is the 22nd January 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. We got very good number of trades today. Even before that, all of you please understand, we are providing complete free training on supply demand zone price action. All the training lessons can be accessible at our NeoStock YouTube channel. At our channel homepage, you please click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab, you get access to this post. And this post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. All training lessons are available in this playlist. Just scroll down to the bottom of the page to access the first lesson. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time we release a new video or any other important updates, we will be providing at our Telegram channel. Now let's get into the high liquidity zone analysis. Yesterday, end of the day report, we identified 13 high liquidity zones from daily and 75 minutes time frame. So we got very good trades today. The first one is Bharat Forge. This is a daily high liquidity zone. This is 75 minutes high liquidity zone identified by our software. Our software considered this as a leg-in, 3 base candles and a rally candle. Of course, these are the medium size candles, part of the base. And this zone we need to fine tune with 15 minutes time frame. See here, you have a rally candle, a leg-in, 2 base candles and a medium size leg candle. They are part of the base. And with pro gap, we have a rally candle and follow through candles. And this 15 minute zone again fine tuned with 5 minutes time frame. So here you have a rally candle. You have a base candle, very small base candle, and again a rally candle with pro gap. So today exactly that area, price is entered at morning 9:45 candle, 9:45 5 minutes candle, and then reached the 15 minutes target. When it reached at 10:45, 5 minutes candle it reached. So within exactly 1 hour your trade is completed. This is the 15 minute zone. Here you have a rally candle as a leg-in, 4 base candles and a drop candle. So to this area again it moved. So how much profit Bharat Forge has given? Bharat Forge has given 13,000 rupees profit, which is a 10.7% ROI as per one futures margin cost. In just 1 hour, we got 10.7% ROI. And the next one is Yes Bank. Yes Bank is also a high liquidity 75 minute zone. Let me go to the 75 minutes time frame here. So our software identified this rally 1, 2, 3, 4 base candles and a rally candle, rally base rally, and this one we fine tuned with 15 minutes time frame. Here you have a 15 minute zone. Drop base rally, the 15 minute zone. This 15 minute zone again you need to fine tune with 5 minutes time frame. Go to the 5 minutes time frame. Here you observe carefully. You have a rally candle. You have a base candle. Again, you have a very big rally candle. It looks like a failed ERC candle, but this is good enough to qualify as a leg out because the complete body came out of the zone. This rally base rally. And this rally base rally is the origin for this this 15 minutes fine-tuned zone. This 5-minute zone is the origin. Why we are focusing on the origin? Because you may say here again a drop, 1, 2, 3, 4, 5 base candles and again a rally candle with failed ERC with a hidden body. That way you may say. But this is the origin because see, from this area only it picked up the orders and then entire move is started from here. Including 75 minutes leg out formation also took place from this 5-minute zone. So that way you have to understand this is the actual area where institutions kept the real institutional order flow. In case if you are taking a trade here, this should be your stop loss. See the risk is very big. You can't handle it. So that is the reason why this is the exact place. And today prices entered into this area. We got the trade in this candle, but have you noticed this zone is pierced. Of course, it is within the stop buffer. It is within the stop buffer. It didn't cross the stop buffer value. And then again prices were started moving up and finally reached the 15 minutes target. Here we have 15 minutes target. Sorry, this is not 15 minutes target. This is 15 minutes target. Let me show you. See this failed ERC rally. You have 1, 2, 3, 4 base candles and drop candle. This is the 15 minutes target. Then what is this? This is 5 minutes high liquidity zone. We have a drop, 1 base candle, medium size candle, part of the base, and drop this 5-minute zone. See how it is holding the prices. Till here already it gave 1:4 RR till the 5-minute zone. So we don't have any issues with the RR point of view. But what is happening? Our 15 minutes target is not achieved. The 5 minutes level holding. See, it is simply holding the prices. So definitely we should realize if not in this candle or not in this candle, maybe in this candle or maybe in this candle, somewhere here. Definitely you have to exit. You need not go up to here. Maybe this is the last opportunity. So by this time, by the time this candle is tested and coming down, again tested, came down, again tested, you have to exit here. If you miss, probably here you have to exit. Because it is continuously holding the prices. It is not letting the prices go up. If it is a 5-minute zone, 1 minute zone, maybe we have some hope because 1 minute zone lifetime is very small during intraday. At least after 1 hour the zone will be violated. But this is a 5-minute zone. Intraday 5 minutes high liquidity zones are very, very strong. See after that what happened, this 5-minute zone, it consumed all the demand and then you see it pushed the prices. Anyway, this is already pierced, no institutional order flow and no more order flows within this zone. And finally enter zone is violated. And below maybe there could be some other high liquidity zones might be there in the below. Or there could be other zones might be there. They pushed the market up, but this high liquidity zone is gone. But before it's gone, that means before it is violated, it gave a trade, successful trade. You may ask a question, why we didn't plan second trade here? Generally, intraday we plan second trades. The reason we didn't plan because this zone is already pierced. If a zone is pierced, you can't take second trade from that pierced zone. You must understand there should be a institutional order flow. Suppose prices went very deep into the zone, let us assume not pierced, very deep. Even then we don't take second trade. Why? Because they are very deep, close to the distal line. Second time there are higher chances to be violated. That's why price action you should observe. Suppose prices just touched the proximal line or little inside the proximal line came and again moved up. Definitely you will plan second trade. There are higher chances the second trade also might work during the intraday. Next trading day you can't take because it is already a tested zone. But during the intraday zone, you can, within the fine-tuned zones in high liquidity area, many times they support second trades. But depending on the kind of price action that took place earlier. So please understand those points. That is the reason why we didn't take, because it is already pierced. So that means the institutional order flow is no more valid, because the 15-minute zone is gone. You may ask, a rally-based rally is created. Why can't we plan? You may ask. Because this is not a fine-tuned zone, because this 15-minute zone is a pierced zone. Once a 15-minute zone is pierced, within that 5 minutes, newly created 5 minutes zones may work or may not work. There is no guarantee. They are like normal 5-minute zones. We don't plan in the normal 5-minute zones. We plan only in the fine-tuned 5-minute zones. The fine-tuned zone should be inside the 15-minute zone. That should not be pierced. But here, this 15-minute zone is also pierced. So that is the reason why we can't plan the next trade in this drop-based rally. Anyway, after that, this entire high liquidity zone is also violated. But how much profit S Bank has given? S Bank has given 4,160 rupees profit, which is a 3.5% ROI as per one futures margin cost. Okay, next one is ONGC. ONGC is also 75 minutes, high liquidity zone. And this is a rally, 2 base candles and a rally. This is what identified by our software. And this one we fine-tuned with 15 minutes time frame. Here we have a 15-minute zone. Drop base rally. This entire thing is a 15-minute zone. Okay, then 5 minutes. What about 5 minutes? So within the 5 minutes area, 15-minute zone is not there. See here. You have a rally candle, you have another rally candle, in between no base candles. But many times this zone will be violated, right? But from where it took the order flow? Who supported this order flow? So before that there is a drop base rally. And this is the area already tested. And now this is the area responsible. And here a rally candle is created, big rally candle, another rally, another rally. So definitely here institutions might have added a new order flow. Moreover, this is a lower time frame zone as an horizon to this entire 75 minutes high liquidity zone. And also it is overlapped with even fine-tuned 15-minute zone. So that's why definitely we can plan our trade in this area next time when prices are reaching. And it happened today. Today prices entered into this area. When prices entered at 12 o'clock 5 minutes, we got the trade. In case if you miss next one more trade, you got it 12 o'clock 25 minutes. After that prices were moving, but failed to reach the 15 minutes target. But almost near to the closing hour of the market, it achieved 1:3 RR. The moment it achieved 1:3 RR, I posted at our Telegram channel. Why I posted? It's like an indication to you guys. Maybe it's the time to book the profit. If anybody is waiting for reaching this 15 minutes zone, it may reach or may not reach, because it's closing to the closing hours of the market. See, when it reached this target, 1:3 RR around 2 o'clock 20 minutes. Maybe in this candle, 2 o'clock 10 minutes it reached. And if you have taken intraday margins, if you have taken from your broker, probably you have to close your positions by 2:30 or 2:45. Already you got a good profit by the time it reached here, 1:3 RR. Okay, even though it failed to reach, but it came very close to the 15-minute zone, because there is no more further market. They stopped. So definitely before that you have to exit. So the best option is to exit at 1:3 RR. Up to 1:3 RR, how much profit it has given? ONGC. ONGC has given 4,042 rupees profit, which is 3.7% ROI. See, before you take this ONGC trade, you already closed Bharat Forge trade. Morning I posted Bharat Forge also at our group. The moment it reached the target. When Bharat Forge trade is completed, okay, it is completed at 10:45. That means 10:45 you exited the trade, your money is released into your account. Now the same money you can invest in ONGC. At what time? That is at 12 o'clock. Already 10:45 your money is released and you got the next trade at 12 o'clock 5 minutes. Today you got multiple trade opportunities. Multiple opportunities to take multiple trades today. With the same capital, you would have taken multiple trades today. You would have got a very good profit today. That's why I told you in the beginning of this session, we got good number of trades today. When S Bank trade, you would have taken this is at 9:45. Maybe if you already, by the time you might have already taken a Bharat Forge trade, you might be in the Bharat Forge trade, definitely you might be missing this trade. Or if you want to take this trade, again you need to invest another capital. Same capital you can't reuse because your money is already invested in Bharat Forge. Those who missed Bharat Forge, probably you would have got opportunity in this Yes Bank trade. First of all, Bharat Forge, we can't miss the trade because the risk is very small. It is having pro gap. So many advantages you have Bharat Forge. Very small risk. But you might have seen Bharat Forge, how that small risk holded the prices today. That is the power of fine-tuned zones and that is the power of high liquidity zones. So this is Bharat Forge chart. We got at 9:45, we got trade. See the risk, very small risk. The moment prices, see how sharply it pushed the prices. Before that it was falling. But exactly the high liquidity fine-tuned area stopped the fall and pushed the market up. I mean in this particular stock. Okay, next we have discussed about ONGC. ONGC, how much profit it has given? ONGC has given 4,042, which is 3.7% ROI as per one futures margin cost. Next one is IndusInd Bank. IndusInd Bank today gave two trades. IndusInd Bank is a daily zone. It is a daily high liquidity zone. This is a very old zone, IndusInd Bank. When it is in the year 2022 zone, this is a 2022 in the year. 25th July, after the two base candles and then a rally candle with pro gap. And recently prices entered into this zone. At the time institutions created multiple new order flows here. I think earlier once we discussed this order flow, the bottom one. Go to the 75 minutes time frame. You have a drop, base, rally. And also you have one more LOTL. Of course here LOTL, drop, base, rally, you can't take because it is picking the orders inside the zone. But just outside the zone or at the edge of the proximal line, again you have a drop, 3 base candles and a rally candle. Drop, base, rally. Within this 75 minutes, you have again multiple order flows, 15-minute zones. So here you have a drop, 1, 2, 3, 4 base candles and a rally candle, the 15-minute zone. And also here you have a drop, a base candle and a rally candle, drop, base, rally. And this 15-minute zone, we have a fine-tuned order flow. You have a rally, you have two base candles, you have a rally candle. Here risk is a little bigger, so I adjusted up to this candle. This is the actual institutional. From here the horizon started. So that's why exactly this is the area we have very strong institutional. Even you can take type 3 proximal because there is good enough risk. Okay. So here we have a fine-tuned 5-minute zone. See, today prices entered into this fine-tuned 5-minute zone. Here you have a 15 minutes target. What is the 15 minutes time frame? You have a failed ERC as a rally. You have 1, 2, 3, 4 base candles and a drop candle. And once again it picked up the orders from this, and again today morning prices sharply moved down from this 15 minutes target zone and gave an entry. This is the 15 minutes candle. Go to the 5 minutes time frame. Exactly which candle you got the trade? Morning 9:25 minutes candle, it gave you the trade. But the problem here is it is a fail to reach this 15 minutes target. It achieved 1:3 RR. See here, it achieved 1:3 RR. But failed to reach 15 minutes target. Because it achieved 1:3 RR, it is a successful trade. Generally what happens, many people aim for this by keeping trailing stop loss the moment it reached 1:3. If you exit, you get the maximum profit. In case if you don't exit, you would have gone to the trailing stop here, because there are some times after achieving 1:3 RR without reaching 15 minute zone, prices may come down. So here you have a rally, two base candles and a rally with a hidden body rally candle, and this one is violated. Probably somewhere here, this is the demand zone. So probably somewhere those people who are using a trailing stop, 1 minute trailing stop after reaching the 1:3 RR, but you don't want to book the profit, you are aiming for this 15 minutes target, probably your trade would have been stopped out here. You might have exited and booked the profit. But those who booked the profit at 1:3 RR, probably you would have got maximum profit in this trade. Because it did not achieve, but still achieved, it is 1:3 RR. This is the one. We are considering this is a successful trade. Sorry, this is the one. 4,650 rupees profit we got, which is 4.3% ROA. That is still 1:3 RR. And those who are using trailing stop, 1 minute trailing stop is failed after reaching 1:3 RR. Probably you might have got maybe around 4,000 rupees, something like that, you would have got the profit. A little less ROA you would have got, maybe 4% ROA you would have got. Okay, but our HLQs on performance point of view, we are calculating the maximum, especially when stock failed to reach the 15 minutes target. We calculate up to 1:3 RR. Because that is the minimum thing it should achieve, 1:3 RR. If not 1:3 RR, any newly created 15 minute zone, there it should exit. We have to exit the trade. You know all these strategies we discussed. Okay, after that again what happened? Prices once again falling, and again, now we can take another trade. Why we can take another trade? Because the zone was not pierced. That is reason number one. And prices near to this proximal line again started moving. Still you have a lot of institutional order flow is there. So during intraday you can plan. If it is tomorrow, definitely it is a tested zone, you can't take. During intraday, why you can risk? Because already you have one successful trade. Even if it is violated, small money you will be losing. Still you will be in profit only. Suppose if this second trade gave success, you get a double, you get again bonus, double bonus. So that is the reason why we don't mind to take a risk for planning our second trade. But we are lucky with the second trade because the zone is slightly pierced, but it is within the stop buffer, and after that again market was started moving up and finally this time reached RR. 15 minutes target it reached. Of course, here 1:3 RR. After that, it moved further up and finally reached. Okay, this 15-minute zone is violated. That is a different story, but you would have booked your profit. But those who can't wait till beyond 245, probably somewhere near before 245, somewhere in this candle, you might have booked your profit. Near 1:3 RR level, you might have booked the profit. Because some people should close their positions at 2 o'clock 45 minutes. Maybe some brokers, they allow only up to 2:30. You have to close. If you are in cash segment, if you take your trade in F&O, even before one second before market closing also, you can exit the trade. If you are a F&O trader. But second time it reached 15 minutes target. It has given a profit 6,025 rupees profit, which is a 5.6 RR. I mean, not RR, ROI. You got 5.6% return on the investment as per one futures margin cost. But earlier till 1:3 RR, Indus Bank, maybe I should have added this comment. I would have achieved, first trade achieved only 1:3 RR. Second trade reached the 15 minutes target. If I don't put any comment here, that indication it reached the 15 minutes target. Generally I keep, when it reaches 1:3 RR, I will add the comment. But in this case I forgot, so updated anyway. And next one is Jindal Steel. Jindal Steel given two trades. First trade achieved 1:3 RR, and the second trade, the zone is violated. Of course, first zone is violated. There is one more order flow. The second order flow is violated. Both, if you compare, still you will be in profit in Jindal Steel. Okay, let's go to the Jindal Steel. This is also, this is a 75 minutes high liquidity demand zone. Okay, let me go to the 75 minutes time frame. Our software identified a drop base rally with pro gap here. Drop base rally. This 75 minute zone fine tuned with 15 minutes time frame. Here we have two order flows. Rally, base, rally. There is one more order flow. Drop base rally. Let us fine tune both these zones with 5 minutes time frame. See, here you have a drop candle and then you have a rally candle. In between, no base candles. Let me hide that big candle. You will get clarity. See, this is a rally base drop. A supply zone is created here. After this drop, there are no base candles. Again, a rally is created with the violation of this rally base drop. So you can't take this 5 minute zone. This will be easily violated. But here we have order flows, multiple order flows here. You have a drop, base, rally. Maybe this leg out is not very great, but okay, we can consider. Maybe some of you may say this is a medium size. It is a little bigger than medium size. Not maybe a little smaller than large, but okay, this is okay. This is a drop base rally. And again you have a rally base rally. This is a good leg out. So if you hide these large candles, you will get a better clarity. Now you will convince this is a drop base rally. See, now rally base rally. This is a clear, bigger structure. This one. Okay. So these are the two fine-tuned 5 minute zones. Look what happened to the first 5. Anyway, this will be easily violated because there is no proper structure. Today it is easily violated, and institutions also see how they drop, base and drop. Maybe some order flow might be here. Sometime there was a fight, imbalance. Balance. These base candles are always balanced. Imbalance is a leg out candle. After that, a big imbalance took place. But price entered here. We got a trade. Go to the 1 minute, you get a better understanding here. See, it came. It gave a trade. We took a trade. Then prices were started moving up, moving up. It achieved 1:3 RR. 1:3.06. So almost a little bigger than 1:3. So 1:3 RR achieved. So those who book the profit at 1:3, you get a profit. But those who go for a trailing stop after reaching this 1:3 RR, see here you have a rally, base rally in this candle. Maybe not in this candle. In this candle is slightly, maybe you might have added small buffer here. Maybe probably in this candle it is violated. In this candle you would have exited your trade, but still you would have got some profit. A minimal profit at least you would have got. Those who did not book the profit here, 1:3 level. Those who booked at 1:3 level, you would have got the maximum profit. After that, what happened? This zone is violated. If anybody would have planned for second trade in this, your second trade would have been stopped out here. But anyway, already you got some profit here. And after that, again the second fine-tuned zone prices came. And this is a fail to give you, it pushed the market, but failed to give 1:3 RR. It's not good enough. Maybe it has given 1:1 point something RR. That's it. After that, the zone is violated. So this is the way one trade gave you profit for 1:3 RR and another trade gave you the loss. Okay, how much profit and losses we got? In Jindal Steel, the first trade gave you 2,968, close to 3,000 rupees profit, which is a 2.6% ROA. That is up to 1:3 RR level. If it would not have reached 1:3 RR, even this could have been a failed trade later. Luckily, it reached 1:3 RR. And the next one is stopped out, which is 1,562 rupees. That is 1.3 minus 1.3% negative ROA. That is the maximum. Those who don't want to take more than 1% risk, maybe you would have fine-tuned at 1% level. But this is the maximum, because we can accept maximum up to 2% risk. And you also got one more trade, but we didn't take. Why? Let me explain. Very interesting. Listen carefully. That is Dalmia Bharat. Dalmia Bharat is a daily high liquidity zone. How we identified? Our software identified drop, 2 base candles and rally candle. This is the daily zone. This daily zone is fine-tuned with 75 minutes time frame. Here we have a 75-minute zone. Failed ERC, maybe a rally, base rally. Dynamic viewpoint of your rally, base rally. You have one more rally, base rally with the hidden body, rally candle. We have 2 75 minutes order flows. And we have 2 high liquidity zone order flows also there. This is one high liquidity zone. We will see at 5 minutes level. We have another high liquidity zone. I think this one we already discussed earlier, this 5 minute zone. Because previously once we got a trade from this zone. Okay, now let us fine-tune 75 minute zones with 15 minutes time frame. See here in the 15 minutes time frame. This is the 75 minutes. Within 75 minutes, you have 15 minutes drop, base, rally. Maybe if you want to keep even this also part of the base, Now the entire 75-minute zone will become 15-minute zone. So that's why I consider, because imbalance started from this candle. Moreover, this is a big candle, looks like a failed ERC candle, but the complete body is coming out of the body. I mean the base. This is the base. So that way this failed ERC candle you can use as a leg out. But here again with the pro gap you have follow through candle. That way you can consider. Or if you consider this is also base, this entire thing will be base, then with pro gap this is a rally candle. Okay, this is the 15-minute zone. This is the 15 drop base rally is 15-minute zone, and also here also you have a drop base rally and follow through candles here. Now these 2 15-minute zones you need to fine tune with 5 minutes time frame. Look into the first one. A rally candle, large candle. Again with the gap rally candle. But in between there are no base candles. Where is the base candle in between? No. When you don't have base candles, obviously this zone will be violated easily. That is what happened today. This zone is easily violated. But what about here? Here we have a drop candle as a leg-in. You have 2 base candles and a rally candle. This is the fine-tuned 5-minute zone. The blue color line what I have drawn is the stop buffer value. Today prices reached up to this. We got an entry, entered the stop buffer value, and finally see how much big move it has given. Go to the 15 minutes level, you will see the profit, how much profit. Maybe somewhere here you have a 15-minute zone, rally base drop, until here you would have got a good profit, right? Go to 5 minutes time frame. A rally candle, in 10 minutes our trade would have been completed. You would have got a huge profit. Okay, why we didn't take the trade? Is it maybe because 9:15 candle gave the entry? Let us go to 1 minute time frame. Which candle it gave the entry? 9:15 candle. Mostly 9:15 candle we don't take the trades. But if anybody planned a trade, definitely the trade would have been executed and he would have got a very good profit. That way this is a successful trade. That is the way you can argue, right? At least zone point of view it gave the performance. But why we didn't register this stock in our Excel sheet? See, Dalmia Bharat is not there in our Excel sheet in today's trades. Maybe it would have given you a huge profit, maybe 10% ROA or 12% ROA you would have got in this stock. This is the target supply zone, right? Let me change the color. You would have got the profit, right? But why we didn't register? What is the reason? For that you need to observe in our daily chart. See, this is before that, let me talk about this. Then you will get clarity. Here you have a high liquidity 5-minute zone here. See, here you have a drop candle, you have 3 base candles, then you have a rally candle. Prices went, again came down and gave an entry, first test, again moved up, again gave a trade. Again while giving the trade, again drop base, rally, maybe leg out is not really great, but okay. We can say some new order flows again added into this zone. Today is this zone tested? It is not tested, right? Now look into the daily chart. Go to the daily time frame. What daily candle is showing? Daily candle is showing the order flow started from this zone. But 15 minutes candle? The order flow started from fine-tuned 5-minute zone. The 15 minutes, that is morning 9:15 candle. 9:15 1-minute candle also prices came from this zone. But a daily candle, it looks like this entire zone is violated. and prices opened from here. Why the difference? Previously, the last Q&A session, I explained this. I think Q&A 18 or Q&A 19. One of those videos, I explained this concept. If you did not listen, please look into the Q&A. The difference between intraday candles and daily candles is intraday time starts at 9 o'clock, 15 minutes candle. But in daily time frame, you have a pre-market open. There is a pre-market session from 9 o'clock 7 minutes or 8 minutes. I think 9 o'clock 8 minutes onwards, if I am not wrong. Or otherwise 9 o'clock 7 minutes. So the pre-market starts. You can place your orders there. So this is the pre-market open. For the last few weeks, maybe last 1 or 2 months, NSE changed the rules and they are including pre-market open in their daily candle open. That's why you are seeing difference in intraday candles and daily candles. Intraday candle open is exactly at 9:15. That is the time the actual trading will take place. In the pre-market, you will be placing the orders. When you are placing the order, it displays what is the open, pre-market open. So by seeing the pre-market open, what is that indicating? This entire order flow has been gone. Even prices reach here, you won't take the trade. Pre-market is the indication for intraday traders. Please remember, if your fine-tuned zone is violated in the pre-market, you won't take trade in that stock. There are higher chances the zones will be violated. That's why pre-market is violated. That is see, look here, this is pre-market open. We don't focus on this zone, the fine-tuned zone. Even though it looks like we got a very good successful trade from this zone, we won't take trade. The order is gone. That's it. Always intraday traders, pre-market open could be a good reference for us. It will save many of our trades. Previously also, some of our stopped out trades, we got saved because of pre-market. Do remember one day market, all our trades were gone on that day. On that day, few other trades, they opened below fine-tuned zone. That way we didn't plan any trades in those zones. But today it looks like pre-market, after pre-market, market opened a little above and looks like from the fine-tuned area prices reached, and from there they started moving. Maybe from there they started moving because institutions might have again added their new orders here. That's why again it pushed the market. So this is a very good lesson for you. I already explained this concept either in Q&A 18 video or 19, one of those videos. If anybody remember the video number, please put it in the comment section. Otherwise, if pre-market would not have opened from this zone, this is the high liquidity 5-minute zone. This is an aggressive trade setup. Today aggressive trade setup looks. But intraday, if you want to take a trade here, again prices should come in this zone. Then only you will trade. Once the market is open, prices did not enter into this aggressive. Only morning pre-market open only it is showing. Why we will take? Because this is a high liquidity zone. It is strongly holding the prices. Next time also we will plan our trade. But today prices did not enter into this zone. The blue color line what I have drawn, there it stopped once the market starts. After that, see how sharply Dalmia Bharat has given. Today, those who have taken trade in Dalmia Bharat, of course, we didn't have an option as a supply-demand zone trader. We don't have any entry point here. But entire day it was moving up. The whole day. Morning itself, sharply it moved. See how much profit, 27 rupees profit, which is 1.5% ROA. Not ROA, 1.5% on your investment. If you would have taken in F&O, 5 times margin they would have given, 5 times margin. Maybe even more, much more better profit we would have got. But anyway, this we did not get. And also there is one zone is violated. We know that the zone will be violated. that is IGL, 75-minute zone. As per the concepts learned in lesson 16, we know this IGL will be violated. That is what happened here. How can we say this is violated? First we will see this is a rally, 4 base candles and a rally base rally, and this one we have to fine tune with 15 minutes time frame. In the 15 minutes time frame, we have a drop candle. Let me hide bigger candles, you will get clarity. This is a drop, 1, 2, 3 base candles and a rally candle with dynamic view. This is the 15 minutes zone. Here also, see, all you can't take because this is a drop candle, rally candle, in between no base candles. But here rally base, rally is there. But this one is violated here. So it's no more a valid zone. So at present this is the only one valid. And this zone, go to the 5 minutes, you will understand why this will be violated. You can easily tell this zone will be violated. Look into the 15-minute zone. See here, you have a drop candle, you have a rally candle, in between no base candles. And in between, before that, lot of consolidation took place here. Such kind of zones, what will happen? They will be violated easily. So that is what happened today. Okay, this is about IGL. And remaining all are daily zones, because I want to make this video short. So I just show you the what happened to the zone. I am not going to explain fine tuning the zone. Now I hope most of you are good enough to understand how to fine tune the zones. Recent training video also, lesson 29, I also explained how best you can fine tune high liquidity zones. Okay, this is a daily zone. Dalmia Bharat already we discussed. Idea. This is a daily high. All these are all high liquidity daily demand zones. Rally base, rally with pro gap. We have a fine tuned zones here. Today price did not enter into that area. IndusInd we already discussed. Indus Bank. Next one is Nestle. Here rally base rally. We have a fine tuned zones here. See today's candle, prices did not enter. Next one is the NMDC. We are in the daily time frame. We are rally base rally. Prices came somewhat close to the fine tuned area, but that is not good enough to get the trade. So that's why we didn't get a trade here. Next, Pidilite Industries. This is also a daily zone. Drop base when 4th March 24, drop base rally. So here you have LTF zone horizon. It doesn't have any fine tuned zones. Directly 5 minute zone as an horizon to this zone. Anyway, prices did not enter into this zone. It doesn't have proper 75-minute structure in this zone. But it is having a good LTF zone. From there it picked up the orders. And again, see here, this daily zone is created and moved up. So that's why this LTF horizon we can plan the trade. But anyway, prices did not enter. And next one is Marico. This is a supply zone, daily supply zone. See today's candle, daily candle. Prices did not enter into the fine tuned area. And the last one is MGL. MGL is also drop base drop. Here we have a high liquidity zone here. This is the high liquidity zone. This high liquidity zone is also not and also here some order flow is also there. This newly created order flow. In the yesterday, a new order flow is created. So today's candle did not enter into that zone. So except this, we got these are the good trades we got from all the demand zones. Many of the demand zones, especially except one, remaining all 75 minutes high liquidity demand zones gave the trade. There are no 75 minute supply zones today. All demand zones. Only one, we know that IGL will be violated. Remaining every stock gave a trade, apart from IndusInd Bank from daily time frame. So this is about today's HLQ zone analysis video. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.